You're watching Personal Finance with Coach Kelvin. Let's get into the video. Hey guys, Coach Kelvin here. And today I thought I would sit down and talk to you about my April passive income that I have earned for the last month, okay? So I've been through my income streams in a video I called How I Earned Multiple Income Streams in My 20s. And basically every month I was thinking I could break down exactly where my passive income returns have come from in my portfolio, exactly what I've invested in that has returned that, and why some months may heavily outweigh other months. So a lot of the ETFs that I buy in my share portfolio, they pay quarterly dividends, and these are generally paid in January, April, July, and October. Okay, so those months are generally going to pay me a little more. I have shares which pay dividends in other months as well, but they're generally going to be my highest income months. Okay, so from dividends in the month of April, 5 of my ETFs paid a dividend to me. So from VAS, or the Vanguard Australian ASX 300, I earned $280.09. From VAE, which is the Asian market minus Japan, I earned $2.57. From VEQ, which is the entire European market, I earned $19.33. From VEU, which is the entire world index minus the United States, I earned $20.06. And from VTS, which is the entire broad United States market, I earned $25.97. Now this brings me to a grand total dividend income of $348.02. This is a really cool quarter for me because essentially that would cover over a whole week's rent for this 3-month period. But it's really cool to look at what your investment returns can cover in that regard, because it kind of motivates you, I only need to invest this much more and then my whole living expenses are covered, for example. So my dividend income, again, was $348.02. Now, we're going to look at my interest income. So this is money that I have in my offset account, offsetting my mortgage, okay? So that basically takes whatever money I have sitting in this account and it wipes out that much debt from my mortgage sitting in my properties. I don't keep much cash in this offset account. I keep a lot of it in the loan itself as well. So in interest, I earned $1.35 in my offset account. Now, I also do some peer-to-peer lending. So with peer-to-peer lending, basically you place money on an exchange and then somebody is able to borrow that money from you and they'll pay you an interest rate in order to do so. So every month you will earn interest, and I've got this set up to reinvest currently. So I earned in interest income from Plenti for the month of April, $34.21, and this has all been reinvested. So this is a really cool position to have some cash in, because I can simply pay a 1.5% fee if I need to access that money fast. It's liquid enough I could get it back within a week. But it's, at the moment, being a very productive asset, earning me an average return of 6.4% on the platform. So that's my Plenti returns for the month of April. Now I'm going to spend a little more time when I get to my rental income. Basically what is earned is a lot eaten up by after expenses, okay? So the money that I earn in rental is not actually reflected in what goes into my bank account due to a few things. So in my West Australian property located in Midland, before expenses, my rental income was $1,111.42. But after expenses, this came in at $824.30. This $824.30 was what was left after the property manager was paid, my water rates were paid, the administration fees and everything else that comes with having your house managed by a property manager and having tenants in there, which I don't have to go out and find and then manage myself, okay? So I'm not including any of the current expenses or bills I have relating to that property. These are just the ones that I pay through renting my house out. So I have my water all paid through the real estate agent. So this is not deducting my interest repayments, my insurance. It's not deducting any maintenance or repairs because there were none during this quarter or this month. And there's many other expenses which can pop up. So property one, $824.30. Now the second property in Queensland, this earned a rental return of $6,273.35. Now why this particular apartment earns so much in rent is because it's a short-term rental, okay? So that means people can book it on a per night basis, and therefore as a result there is a lot more management involved. So after all expenses from this property, not including obviously the interest, insurance, rates, etc., after all management expenses, the earnings were $3,252.63. Okay. Now this particular figure, $3,252.63, is pretty awesome, and provided I eventually get this property paid off, that's going to be a lot of passive income every month if I can keep these short-term tenants visiting and utilizing the property. Now I must put a disclaimer in this particular property. I'm in a 50% ownership sort of situation where whilst I'm in this situation and I have a 50% ownership, but there's a mortgage attached to the loan, I essentially have a 100% liability if the other person who is on the loan is unable to make a repayment. Therefore, I'll count the cash flow as entire, like the whole amount of cash flow, despite not all of it being accessible to me. It would be split between myself and the other party in the event that this property gets paid off. But there you go. Property 2 earned $3,252.63 after all management expenses, and that is including the booking, the cleaning, the maintenance, strata management, etc., because all of these expenses are occurring a lot more regularly within a short-term rental property on a per night basis. Okay, so now we're going to move on to micro investing apps. So I have two that I use. Now one of them is actually more of a broker, but I just have a micro amount of money in there. So I'm going to kind of bottle those two things together as micro investing apps, okay? So the first one I use is Raiz, and I have this with a little bit of money in there, which basically just earns really good returns. It pays dividends, reinvests, and I send a little bit of money there each week. This particular Raiz account has very high growth stocks, and the dividend yield is quite low. So if you're looking for a referral link for Raiz where you can get $5 for signing up, please see the description below. Now with Raiz, I earned $2.24 for one dividend and another dividend 8 cents. So with those two dividends that I earned, the total value of that is $2.32, okay, for this month. The other application or the other brokerage that I use, the micro investing app, is Stake, and this allows me to buy United States listed companies here in Australia. I don't have to pay any brokerage fees to purchase them, but these are bought in a custodian model. So Stake actually buys them on your behalf, and it's basically assigned to your name. Now with Stake, I own a United States property REIT within it. It's called BPY, or Brookfield Property Group. And my dividend income was 92 cents in USD. So I earn 92 cents of a different currency compared to what I have here in Australia, okay? So it's a bit of a diversification, and I got this particular REIT back when the property market had a little bit of a dip during the 2020 market crash, okay? So just to recap, on all of the vessels that I use to invest to create some passive income, this is the amounts I got from each, and then I'll give you the total. So dividends, the total amount was $348.02. My rental income on the first property was $824.30. My rental income on the second property was $3,252.63. The interest I made from money in the bank was $1.35. The interest I made from peer-to-peer lending using Plenti was 34 cents. Oh, sorry, $34.21. And then through micro investment platforms on Raiz, I earned $2.32, and from stake, $92 US. Now this brings me to a grand total for the month of April, which just blows me away, of $4,462.83 in Australian dollars for all of my Australian investments, and then 92 US cents. So I have two sort of portfolios here, an Australian and a United States. So this is actually an amount of income that would be possible to live on if all of the debts were serviced on those property loans and I had very low living expenses. Okay, so I'm very, very excited about how much money that is per month, and the fact that this is the first time I've really sat down and added everything up, because I've only really been focused on my dividend growth at the moment, and I hadn't taken into account my interest growth and also my rental returns. So it's very cool to see that I could potentially live off that money if I were able to pay those loans down in the future. Now, obviously, that's not how much money I get to spend and go live off at the moment. All of my dividends are reinvested, so I use them to buy more shares. They are on a dividend reinvestment plan, and this allows a passive growth strategy where all of the money I return just buys more shares of itself, and my portfolio slowly grows as those dividends are paid. So every quarter, I should be getting more shares added to my portfolio, which I love the idea of. And you can check that out in my dividend reinvestment plans video. Now, the next month I'll have less dividends being paid, so it's likely that the month of May will have a much smaller income. However, that does not change the fact that I'm so excited with what I've been able to earn this month in April, and I hope to grow this, and perhaps next April we can do a comparison and see how much my passive income has been able to grow over time. Now, when you look at the total that I've earned for this particular month, like I said, that's not all money that I'm able to go and live off and earn. From that, I need to pay my interest and principal repayments on my properties. I need to pay for my land rates and any other associated expenses or insurances that I need to maintain the properties in a livable and safe manner for my tenants. I also consider an expense in the rent I pay to live somewhere as well. So after all expenses, it's not covering my living expenses yet, but it's got the snowball rolling and it's growing, and it's allowing me to continually earn more money, which will eventually become something significant. And I can use that to really channel all that debt down, or I can grow my investment portfolio for dividends. Whichever approach I take is going to be really cool to see grow. So guys, I hope you liked this style video. I'm thinking of doing this every month, but if you think that's too frequent, maybe we could do it every quarter. So, every 1 quarter of the year, I do an update of how much I've earned for that 3-month period. Or if you like the idea of monthly, leave a comment below and we'll go through it every single month. I really appreciate you guys watching, and if you got any value from this and you're also trying to grow your passive income, please comment below. Leave a like, and I look forward to seeing you in the next video.